Let's talk about how the 10-year Treasury yield, the not so sexy but super important number that mortgage rates are basically obsessed with. Think of it like the Kardashians of finance. You might not want to follow it, but somehow you can't ignore it. Mortgage rates are currently the lowest they've been in a year, which is great news. But when the Fed cut rates 3 times in 2024, mortgage rates actually increased. Why? Because mortgage rates do not actually follow the Fed's short-term rate. They follow the 10-year Treasury yield. So, what exactly is the 10-year Treasury yield? It's basically our country borrowing money for 10 years. The yield, or the return investors demand on that loan, sets the tone for all things like corporate bonds, car loans, and mortgages. Why 10 years? Because the average homeowner keeps a mortgage for about that long before selling or refinancing. So the 10-year Treasury makes for a pretty good measuring stick. So how does the 10-year Treasury yield impact you? Well, when the yield drops, like it recently did to 4.04%, mortgage rates usually drop too. The yield itself is influenced by 3 things. Number 1, Fed policy. Not directly, but if investors think the Fed will get aggressive with inflation, yields can go up. Number 2, economic growth. In a good economy, investors chase riskier assets like stocks. In a bad economy, investors run back to safe havens like treasuries. And number 3, inflation. Higher inflation equals investors want higher returns equals higher mortgage rates. And then there's the mortgage spread. That's the extra cushion between the 10-year yield and actual mortgage rates. It's usually about 0.75 to 1.5%. Why the cushion? It covers lender costs, investor risk, and the fact that homeowners love to refinance the second interest rates drop. Investors hate that, by the way. The bottom line is mortgage rates are at their lowest in a year. If you're thinking of buying or refinancing, now is probably a smart time to act. So get with a realtor and call me to get pre-approved and get out there. And if anyone at your next dinner party mentions the 10-year Treasury, you can casually sip your cocktail and say, oh, you mean the benchmark that drives mortgage rates? Instant street cred.